Up next on U.S. Bank Business Watch, presented by the Cincinnati Business Courier, the top 10 people who made the news in 2013 and what we'll continue to watch in 2014. After a very long and distinguished career, one of Cincinnati's favorite Irishmen is ready to take some time for himself and his family. And an inside look at Startup Central, the brandery. U.S. Bank Business Watch is next. Good morning. Happy holidays from all of us here at U.S. Bank Business Watch. I'm Brian Patrick. It's good to have you with us this morning. The Business Courier front page centerpiece this week is all about helping you find what you need. The theme is our book of lists, which subscribers will get in the mail this week. Each list in our book is ranked from number 1 to number 25. There's so much information in the book of lists that we thought we'd pull out a few highlights to get you started, focusing on some of the people at the top of the list that we think you should watch in 2014. Cincinnati's largest law firm has a new leader. Jim Sauer, an 11-year Deloitte veteran, took over the managing partner spot from Jim Ellerhorst. He tells us he plans to continue to expand Deloitte's local presence. Our list of largest auto dealers had a shakeup too, with Jeff Weiler Automotive family taking over the top spot from Performance Automotive Network. Pent-up demand from the recession has loosened and apparently brought buyers to Weiler's lots in force. We wondered all year who the Cincinnati USA Regional Chamber would name as its new CEO. They answered the question by hiring Brian Carley. The Cincinnati Chamber is the largest in our region and the 5th largest in the United States. Carley told us he's going to work on boosting access to capital for entrepreneurs. University of Cincinnati President Santa Ono seems to be universally loved by students and by the community. UC broke another enrollment record in the fall, welcoming 43,000 students. We'll be closely watching Ono's quest to make UC the hottest college in America. Well, if you're a small business owner looking for a loan, you should check out page 68 of the book of lists. Landing at the number 1 spot on the list of SBA lenders is Huntington National Bank, which has a new local chief in Kevin Jones. Jones told us the bank has always been strong with small businesses. He is looking to build on that reputation. The Kroger Company is both Cincinnati's largest public company and the largest employer. CEO Dave Dillon is stepping down, and Rodney McMullen, who's moved from the ranks or through the ranks at Kroger, steps into that key position. Dillon has said that McMullen brings a new energy that should be a shot in the arm to the nation's top grocer. The largest employer in northern Kentucky is St. Elizabeth Healthcare, headed by CEO John Dubas. The system announced earlier this month a partnership with TriHealth to lower costs for patients and employers. They also plan to expand into the insurance industry. At the top of our fastest growing private companies list sits Legion Logistics, headed by co-owner Lacey Starling. The company grew revenue nearly 2,000% from 2010 to 2012. Our largest firm, Advance Pierre Foods, made a significant hire at CEO this year. John Simons Jr. has 20 years experience in food, agribusiness, and consumer products. At $1.6 billion in revenue already, we'll be watching to see what moves Simon will make to further expand the food manufacturing firm. Hightowers Petroleum, headed by Stephen Hightower, topped our list of minority-owned businesses and was ranked on both the largest private companies list and the list of fastest growing. The company recently launched HP Energy, which designs and installs energy-efficient systems. Well, that's just part of our list. Be sure to check out the insert. Another local business leader is ending a very long, distinguished, and colorful career. Declan O'Sullivan is retiring as portfolio manager at Ball & Gaynor after 34 years on the local investment scene and more than 40 years in the business. The 78-year-old native of Ireland spent time in Venezuela and Canada before going to grad school in New York and working for investment firm and holding company Baldwin United, first in New York, then in Cincinnati. He started his own firm in 1995 called O'Sullivan & Sims, which became Riverfront Capital Management, and then left there to join Ball & Gaynor in 2006. O'Sullivan says the 1987 crash was the biggest stock market event in his career.
25% drop in one day. That was by far the most startling event. How I handled it, I kind of stuck with it. I was able to somewhat absorb it and figure that, well, okay, did this really make sense? Was there did it portend the end of the world? It seemed like, but you know, I guess I had enough experience at that time to say, well, it didn't.
He still has a bit of that Irish brogue there, in addition to spending more time with friends and family. Declan O'Sullivan says he plans to self-publish a book about the spiritual side of his life. We wish him the very best. Go for it, Declan. Enjoy. Well, this week's issue features a look back at several newsmakers and news events that made 2013 memorable, and it was indeed. In fact, the city will be moving on in 2014 without two very prominent Cincinnati leaders. Cincinnati City Manager Martin Mahoney did not survive the transition of newly elected Mayor John Cranley and left with a year's salary, $255,000, and health care coverage. The city is still searching for his replacement. And the contract of Cincinnati USA Regional Chamber of Commerce President Ellen Vanderhorst was not renewed. As we reported earlier, Brian Carley will take over that role March 1st. No word on what's next for Vanderhorst. Well, this year's top transportation stories are topped by one that shouldn't surprise you, the streetcar. No project saw more ups and downs this year than Cincinnati's efforts to build its first rail-based public transportation project in 6 decades. When construction started in July, it appeared the project would be built no matter how much people opposed it. Then John Cranley was elected mayor, and he pledged to stop the streetcar.
Let's not keep spending money when it looks like the clear majority and the clear mandate of yesterday's election was going in a different direction. I think the people's voice should be heard.
But in the end, streetcar supporters and Councilman Kevin Flynn performed a near miracle and found a group of nonprofit organizations, foundations, and corporations to pony up to backstop the operating costs over the next 10 years. City Council voted on December 19th to restart the streetcar project. Other top transportation stories: the Cincinnati Northern Kentucky International Airport did something it hasn't done in decades. It actually supported a low-cost carrier. Frontier Airlines arrived in May. 2013 was the year that people began to accept the idea that if Ohio and Northern Kentucky want a new interstate bridge over the Ohio River, tolls will have to be part of the way to pay for it. Washington made it very clear that the federal government was not going to write a $2.5 billion check to replace the functionally obsolete Brent Spence Bridge. And finally, the new Interstate 71 Martin Luther King Jr. Drive interchange. City Council voted unanimously to borrow $20 million to help pay for its share of the $106 million project. That interchange is estimated to create 7,000 new jobs over the next 3 decades. When it comes to housing, you might call 2013 the year of the apartment building in Greater Cincinnati. In August, we reported that between 2013 and 2015, more than 4,000 apartment units will be built locally, representing about $500 million in new construction. And more than half of those new units will be built in the central Cincinnati submarket, downtown, and over the Rhine. Since our initial report, a number of additional apartment projects have been announced, and real estate experts say even with the huge increase in supply, it won't quench the thirst for demand. And for tourists needing a temporary home away from home, about 1,000 hotel rooms are planned or under construction. Well underway is the conversion of the former Cincinnati Enquirer office building into a 250-room Hampton Inn and Homewood Suites project. Also moving along is conversion of the Bartlett building downtown into a 312-room Renaissance hotel. Transformation is a powerful word, and it has a lot of relevance in today's business climate. From the long-established businesses to those trying to get off the ground, Tom Goki moved to Cincinnati 14 months ago to lead the transformation of a 125,000-year-old Millicron. That is a 125-year-old Millicron. When he went to technical school to learn machining, the first piece of equipment that he used was a Millicron. So it's only fitting that decades later, he would settle in Cincinnati and head the same company that made that machine.
I like Cincinnati because it's a city you can get around in, but it has all the feel of a big city. Professional athletic teams, university athletic teams, It has great restaurants. It has arts, culture, all packed in a reasonably sized city.
Millicron filed for bankruptcy in 2009, but the company has come surging back in the last few years. Well, some of the best resources available to anybody trying to launch a startup business in Cincinnati are the many mentors who are willing to lend their help and expertise. In the print edition this week, our reporter Andy Brownfield has collected words of wisdom from many of them. One of them is co-founder of the Brandery. Local 12 news anchor Tiffany Wilson had a chance to explore the Brandery last month, and we're pleased to share her story with you this morning.
On the west side of Vine Street, across from the Mercer Commons construction, you'll find a window display that looks like a bumper sticker explosion. Inside the door, the chaos continues. Whiteboards covered, desks cluttered. The Brandery is central station for startups in Cincinnati. The accelerator condenses 2 years of business building into just 4 months.
And over the course of that 4-month period, we make them move really, really fast.
Teams may enter with an idea on a napkin, and the goal is to leave with a credible business and funding. Since launching in 2010, the Brandery has quickly risen to the top of startup accelerators in the country. Mike Bott sorted through 1,000 applications to find the fourth class of companies.
They're not just trying to do something small, they're trying to change the world with their ideas.
Scott Lieberman, TapFit.
TapFit wants to get rid of gym memberships and change the model to pay as you go. It's one of the 10 companies that made the cut.
We are pretty good from a development standpoint. We have like really good engineers and we can build a product, but the one thing that we always struggled with was marketing.
That's where the Brandery excels. Cincinnati is rich with marketing and brand mavens who support Procter & Gamble's consumer goods. The accelerator matches startups with these local mentors, giving the entrepreneurs an edge.
Conrad Billets, Framery.
Lens will just snap in, snap out very easily.
Realistically, we wouldn't be where we are and would not have been able to accelerate as quickly as we have if it wasn't for the Brandery.
Conrad Billets is the founder of Framery, a company that allows customers to snap the same lenses into multiple frames.
For the most part, it's been 2 guys.
With a dream.
Yeah, pretty much. With a crazy dream that everyone says shouldn't work and won't work, but it's working.
About 9 out of 10 startups fail. Getting into the Brandery greatly improves those odds. 8 of the 10 companies from last year's class are still in business.
They're still living the dream, right? They don't have to get a real job yet.
To date, the Brandery startups have raised more than $23 million and created dozens of jobs in Cincinnati.
Is this something you'd recommend to other startups?
100%.
TapFit is going to disrupt the fitness industry by changing the way people purchase fitness.
Tiffany Wilson, Local 12 News.
Thank you, Tiffany. It should be an interesting 2014 for the Brandery and the entire startup community in Cincinnati. You know we'll keep you updated here on U.S. Bank Business Watch. And up next this morning on the show, paying tribute to former Ohio House Majority Leader and Cincinnati native William Mallory. The passing of a legend requires a legendary tribute. That's exactly what happened with William Mallory Sr. He received last Sunday this public tribute and the opportunity to say goodbye and celebrate his life at a memorial service at Union Terminal. Mallory was the longest-serving majority leader in the history of the Ohio House. He passed earlier this month. He was 82. Local 12 news anchor Paula Toti has this tribute.
William Mallory Sr., the first black House Majority Leader in Ohio and the longest serving in its history, was remembered for personal contributions.
I can imagine that he's very proud of his family because the real legacy of Bill is through his family.
He was remembered for reforming the municipal court system.
And now the municipal court is divided into districts which guarantee not only the actuality of justice, but the appearance of justice, and it guarantees that black judges will always serve in Hamilton County.
He was remembered as a standout in the Democratic Party who never forgot his West Side neighborhood.
Sure, he prowled the corridors of the State House, but he knew instinctively that all politics is local. and that it was just as important to him to walk the streets from the West End, from Dayton Street to City Hall and the courthouse, always dressed to the nines.
He believed in the value of public life and public service so fervently.
In all the ways he was remembered, Mallory was celebrated.
Soon and very soon. Hallelujah. Yeah.
He will be greatly missed, and Mark Mallory Sr.'s contributions long felt here in Cincinnati. Well, as we all enjoy the holiday season and all that goes with it, it's not too early to consider what is likely to happen from an investment standpoint in 2014. While this year has been a solid year, certainly next year will be different in very important ways. So what should we expect? For perspective on that important question, we turn to our Jim Russell, U.S. Bank Wealth Management Senior Equity Strategist, who is joined this week by Mindy McLaughlin, U.S. Bank Wealth Management Senior Portfolio Strategist. Jim and Mindy?
Brian, thank you. This morning we're honored to have Mindy McLaughlin, who's our Senior Portfolio Manager, with us at U.S. Bank Wealth Management. Mindy, welcome and happy holidays.
Same to you.
Yeah. Mindy's going to shine up her crystal ball today and let us know maybe what's on tap for the year of 2014. So let's maybe rewind a little bit, set the table. What worked well in 2013 and maybe what did not?
Sure. It was a great year for domestic stocks. We saw returns in the range of 25 to 30%. A lot of those higher numbers came from small cap companies as well as lower quality companies. Developed international stocks posted a pretty nice 14%.
Right.
But then you had emerging markets, commodities, and bonds, which really didn't fare too well last year.
Understood. Those are big numbers, though, across the board, right?
Yes.
You know, surely 2014 will be a little bit different than 2013 in probably some important ways. One of those important ways may be the interest rate scenario. Can you maybe go into some detail there?
Sure. Well, Jim, as you know, and I think we've spoken about this on this program before, as interest rates rise, bond funds actually decline. So, and the reason there is because bond funds never mature. So as we saw interest rates move up in 2013, a lot of bond funds suffered principal losses. So it's really not an inflation issue. That's not what's causing the interest rates to rise, but it's more of a normalization of rates, and then certainly now with the expectation, and now we know the actual Fed tapering, that's going to impact things even more. Next year, we think the 10-year Treasury note yield will finish between 3.4 and 3.75%. It's at around 2.9, close to 3% right now. So for those folks that own longer-term bond funds, they may experience principal loss again next year.
That would be an important difference. That is rates on the rise. They've been so calm for so long. Maybe a change of foot, right?
Yes.
Okay. Many of our viewers, Mindy, own stocks through 401ks, other types of vehicles as well. What is the outlook by U.S. Bank Wealth Management for 2014 for the stock market?
Sure. We do still feel there are some opportunities there. European stocks in particular look pretty good to us right now. Europe has been in a recession, and we think that's improving there. A lot of those stocks are trading at pretty low valuations, about 11 times earnings. And certainly with kind of a slow growth, low inflation environment, as well as an accommodative central bank, we think there's some opportunities there. On the domestic front, we still like the S&P 500. Do think that you know, we're approaching fair value. One of the metrics that we look at is the price to earnings ratio. And essentially what this is, the bigger the number, the more expensive stocks are. So as you can see, you know, we are approaching kind of those historical norms, but we think there's still room to run there. And we're actually forecasting about a 7 to 9% total return.
A solid year.
Including the dividend next year, which isn't bad for high quality stocks. And I think it's going to be the kind of a year where dividends really do matter. We've seen some recent announcements with GE, 3M, and Boeing, to name a few, where they've increased their dividends, which is a nice pay raise.
Sure it is.
The other thing is, I think if the global growth dynamic unfolds and plays out, we may also see a shift from small cap leadership domestically to large cap company stocks. So we'll see how the year unfolds.
Boy, important stuff to keep in mind. Mindy, thanks for joining us today. Happy New Year, happy holidays. Brian, back to you.
All right, thanks, Jim and Mindy. As always, we are grateful to you and U.S. Bank. Still to come on U.S. Bank Business Watch this morning, do you need to charge up your career in 2014? Career expert Julie Balke is in the studio to tell us how to do just that. Stay with us. In this morning's Business Insight, if your New Year's resolution is to charge up your career, we've got some help for you. Julie Balke is a career strategist, president of the Balke Group, otherwise known as Career Happy Nation. She joins U.S. Bank Business Watch producer Kelly Leon. Kelly and Julie?
Thanks, Brian. Thanks for being here, Julie.
Sure.
And bringing Career Happy Nation. So no one cares more about your career than you do, or at least that's the way it should be, correct?
Right, that's right, nor should they care.
So I'm in the doldrums. I need to rev it up for 2014. What are the two top things I should be thinking about?
Your network. You know, we get nowhere alone.
So build your network.
Yes, internal network inside your organization as well as your external network. And really build it with intention. Know who you need to connect with to reach your career goals. And always think about reputation. It's a word we haven't used much since high school, but we do all have a professional reputation. Know what yours is and manage it.
And building a network is really just reaching out to people, like being open to it, right?
Yeah, make time to have coffee or lunch or connect with people at events and meetings, people who what they do may somehow align with your goals. We all have people that we haven't, that we've lost touch with, that we'd like to get back in touch with. So make it a priority to meet with someone that you haven't met with for a while, maybe once a month.
And your second top tip involves risk.
Yeah. You know, since the recession in 2008, a lot of people have really sort of gone inward and battened down the hatches and said, I'm just going to stay here as long as I can. Well, we're coming out of that, and there are a lot more job opportunities than there were back then. But a lot of people, even though they want to do something different, are still so stuck in, I've got to hang on to what I have. Make this the year that you step out a little bit and take a little risk for your career, either inside or looking out to see what else you can do.
And that's hard for people, that risk taking.
It is, but just baby steps of risk. You don't have to make the big jump, you know, either in your organization or outside, but what you really want to do is reach out a little bit. What more might I be able to do? What can I add to my career portfolio to make myself more attractive, more promotable, more marketable? Just baby steps at a time. It doesn't have to be the big stuff.
Okay, well that's all we can handle for right now, too, because our head's swirling with the holidays. So I'm going to take more risks and I'm going to build my network.
Yes.
That's our advice for right now.
That's right.
We'll have you back next year with even more advice.
Okay.
All right, thanks, Julie. Brian, back to you.
All right, Julie, I'm going to take that advice. Thanks, Kelly. And thank you for joining us this morning and each Sunday morning here on U.S. Bank Business Watch on Local 12. We'll be back next Sunday in the new year, 6:30 on Local 12. And if you sleep in, we're at 10 a.m. on the CW. Now, for more business news all during the week, you can visit the Business Courier online. Sign up for our daily emails. We'll send them out in 2014. You can also follow us on Facebook and Twitter. That address is CincinnatiBusinessCourier.com. I'm Brian Patrick. For all of us here at U.S. Bank Business Watch, enjoy the rest of your holidays. Happy New Year. Have a great Sunday and a good week.